To record the business transactions within any application that can be purchasing, inventory or order management, what setups we have to complete, what we have to keep ready within the instance, we'll go and see. So you want to record on transaction which is related to purchasing. So you purchase something, you want to record in the application, or you did some sales activity that you want to capture within the relevant application. So how to record any sort of transaction within the application. Say today we purchased one laptop. How to record in the application. So we have to enter the date, right, on which date we are purchasing, and what we are purchasing. It could be some purchase or sale, what activity we are doing, and the activity worth, what is the value of the amount. Say the transaction value is 50,000. So when you record the transaction, that could be purchase transaction or sales transaction, yes, we are entering the date and we are entering the activity what we are doing, and we are entering the amount. But along with this, we have to provide more detailed information. When you talk about date, okay, say that today date is 19th September 2019. The date is very detailed. When you talk about sales or purchase, say we are purchasing laptop purchase, okay, and amount is 50,000. Fine. So the amount whatever we are entering as 50,000, that is in which currency we have to specify within the application. Okay, the currency, say that is 50,000 is rupees or dollars or dinars, exactly which currency we have to address. Say 50,000 is USD. Okay, $50,000. Again, when you talk about laptop purchase, in terms of organization, the laptop purchase we are doing for which company within the enterprise, within the organization. There could be a number of companies or say branches or different units where they are operating the business. You have to specify the laptop purchase is belongs to which company, which department, and in which location. You have to provide the detailed information. You have to provide the detailed information. This is how we have to capture the each and every transaction. We have to provide the detailed information like date, the activity related detailed information which can be tracked within the organization for any sort of reporting requirements, and what are the amount we are entering that we have to address with the currency. Now the first point, these are the three elements which we have to consider. One is date, other one is the activity what we are doing, the third one is the amount where you have to address with the currency. We'll go one by one. The first component is date. If you want to capture the date, within the application, what we have to do is we have to create the calendar within the application. We have to create the calendar. If you create the calendar, you can maintain the dates so that whenever you record the transaction, you can just provide the transaction date. When you talk about date, the date should belong to specific month. So for that reason, what we have to do is, if you want to create the calendar, first we have to identify the calendar we are creating for which country. So if you are doing this Oracle Apps implementation for Indian client, we have to look at What is the financial year in the India? Say we are going to do the implementation for one of the Indian client. In that case, we have to look at Indian financial year. Within the India, what is the financial year we have? So if you are going to do the implementation for USA client, the same. What is the financial year for USA? We have to see. What is the financial year for India? It starts April, it ends in the March. If you take current financial year for India, it started in April 2019, it ends in March 2020. This is a current India financial year, and for USA current financial year is it started in the Jan 2019, it ends in the December 2019. So when you are doing the implementation for any client, to decide the calendar creation, first you have to look at what is the financial year within that country. Based on that, we have to take the further decision. So if you look at India financial year, it is starting in April, ending in the March. It is starting in the 1 year and ending in the next year. When you look at USA financial year, it is starting and ending in the same year. Okay, it is starting and ending in the same year. So if any country financial year is starting in 1 year and ending in the another year, doesn't matter exactly when it is starting. It may start mid of the year also. Here as per India financial year, it starts in April, ends in the March. Okay, but when you talk about some other countries financial year, that may start in the August and it may end in the next year July. Doesn't matter when it is starting, only the point we have to understand when it is starting, and whether it is starting in 1 year and ending in the other year or not, we have to see. The other point is, as per USA financial year, it is starting and ending in the same year. If any country financial year is starting in 1 year and ending in the another year, that year we call as fiscal year. We call it as fiscal year. If any country financial year is starting in 1 year and ending in another year, that we call as fiscal year. If any country financial year is starting and ending in the same year, that we call as calendar year. That we call as calendar year. If any country financial year is starting and ending in the same year, that year we call as calendar year. So this is how we have to finalize. Based on financial year, we have to finalize the year type. Okay, year type. To create the calendar, to capture the dates, we have to finalize that country financial year. Based on that country financial year, which year type we have to use. So these are the two type of year types we have: fiscal year and calendar year. Fiscal year means if country financial year is starting and in 1 year and ending in another year, that we treat as a fiscal year. If the financial year is starting and ending in the same year, that you can take as a calendar year. This is the first point we have to decide to create the calendar. Okay, we identified which year type we have to use based on the country financial year. The same point you have to understand. So it's simply we can say this India financial year got 2 years integration. 2 years integration means it span across 2 years. is starting in 1 year, doesn't matter in which month, but it is ending in the next year. So this scenario, wherever it is applicable, it could be any period, but it should start in 1 year and end in the other year. Those countries financial years we call as a physical years. Okay. And in case of USA, starting and ending in the same year, starting and ending in the same year, so that we have to call it as calendar year. So first point is we have to finalize which year type we have to use. Say if you are going to do the implementation for Indian client, we have to use the physical year. If you are going to implement for USA client, we have to use the calendar year. Done. So now next point is which period type you want to use within the calendar. Okay, period type. Okay, year type, first point, we have to take the decision, we have to identify which year type we have to use. Once we are done with that, we have to take the decision on period type. So when you look at our calendar, okay, so by using the calendar, when you record the transactions, how we want to segregate all the transactions. So weekly base or monthly base or quarterly base or daily base, how you want to maintain the transaction segregation, how often you want to just close your periods as a part of business. This is what we have to take the decision. You can see most of the companies, they follow period type as a monthly. Okay, every monthly they'll try to close the specific period. They'll make sure that within that month, what are the transactions they processed, they accounted, and accurate data they are maintaining with respect to department. So we have a different period types. We have daily period type, okay, weekly period type, as we discussed, monthly, quarterly, hourly, yearly. This is how you can maintain the period types. But when you do the implementation for almost all the companies, we use the period type as monthly. Monthly, once they close the periods, that's how they'll ensure that everything is going smooth. So that is the reason what we have to do is we have to create the period type what exactly we require. If you are doing the implementation for banks, generally they use period type as a daily, because the banks has a practice of closing the books every day. Daily base they close the books. Only in case of banks we use the period type as a daily, but for any other businesses we use the period type as a monthly. So if you take the decision of creating the monthly period, how many periods we can have within the year? 12 periods. Okay, with the 12 periods, we have to create our calendar. For each period, we have to give the date range, when the period starts, when the period ends. These are all the specifications we have to give. Say we are going to create the period type as a monthly. Already discussed, we have a different type of period types: monthly, daily, weekly, quarterly, hourly, yearly. But generally we use monthly period type for any organization except banks. For banks, we have to create the period type as daily. That means within the calendar, each day we take as one period. That's how we'll have days accordingly. Okay, if it is a quarterly, so we'll make 4 quarters and we'll have periods accordingly. That means 4 periods we'll have. So hourly means only 2 periods within the calendar. If it is a monthly, 12 periods. So this is how we have to plan the period type. Say you are going to create period type as a monthly, that means you can have 12 periods. So as per the application, what we can do is you can have additional periods. Okay, if it is a monthly, we can have 12, but within the system you can have additional periods also. The additional periods, whatever we are going to have in the system, those periods we call as adjusting periods. Adjusting periods. So if you are going to create monthly calendar, so we can create Jan, Feb up to December. Again, depending on country, you may start with April and you may end with the March. Anyway, 12 periods we have to create. Doesn't matter whether that is a physical year or calendar year. If it is a monthly period type, we have to create the 12 periods. Along with these 12 periods, we can create additional periods. The additional periods we call as adjusting periods. Why these adjusting periods are required? When you record the business transactions, when you are going to close the year, when you are closing the books and end of the financial year, if you take USA within the December month, if you take India financial year in the March month, we have to close our books. Okay, here we are talking about periods, 12 periods we are taking. Every month we will be closing the period, but we will be closing our books in the end of the financial year. When you are closing the periods, if you want to do some adjustments, if you want to record some adjustments, it's always recommended to maintain the separate period as adjustment period, so that all the adjustments we can record within the adjusting period. That's how you can track separately. So when you do any implementation along with these 12 periods, we suggest to the company to maintain 1 or 2 adjusting periods. Ideally 1 would be enough. When you close the periods in the end of the year, we can suggest them to do the adjustments in the adjusting period, so that those can be tracked separately. So if you are going to create the calendar with a monthly, we'll have a 12 actual periods and we can have 1 adjusting period. That's how you can create up to 13 or else 14. If you want to maintain 2 adjusting periods, yes, you can create 14 adjusting periods, but reality not required more than 1 adjusting period. 1 would be enough. So we'll create 12 periods, those are monthly periods, and 1 adjusting period, and total 13 periods we can create within the calendar. System will allow you to create more than 13 also, but whatever the additional periods we create, those we have to treat as adjusting periods. The purpose of adjusting periods is to record the adjustment transactions, adjustment entries when you are closing your books. This is the point we have to understand. Okay, so you have to take the decision on year type. How you can finalize the year type already we discussed, and then we have to decide on period type. Ideally the period type is monthly. In case of banks, if you are doing the implementation, we use the period type as a daily. Once we decide on year type and period type, we can create the calendar. Whatever the calendar we create within the application, that we call as accounting calendar. Okay, so when you record the transactions, we have to account them. Okay, so each and every activity we have to account with relevant accounts, so with a specific date. So that is the reason the calendar, whatever we create to capture the date. When you are capturing the date should belongs to specific period. Say we are recording the transaction with the today's date. When you record the transaction with the today's date, yes, we can capture the transactions recorded in on which date. Along with that, the date should belongs to specific period. If you record the transaction today, the transaction will belongs to September month. That's how along with the date we can capture the period also. Again, the period belongs to specific year. That's how you'll be able to capture very detailed level or summary level. So whatever the periods we are going to have as a calendar, that calendar you can call as accounting calendar. The point is very simple. To capture the date within the application, we require accounting calendar. To create the accounting calendar, first we have to see which year type we have to use. Then based on that year type, we have to create the period type also. So based on these 2 points, year type and period type, we can create the accounting calendar. Done. That's all about date. To capture the date, we require accounting calendar. Now let's talk about amount. Okay, let's talk about amount. So when you record the certain amount within the transaction, that we have to address with the specific currency. We have to address with the specific currency. Say for example, we are recording the transaction. Within the transaction, we are entering 10,000. Now this 10,000 is what exactly? The 10,000 may be currency, may not be currency. If I am recording the transaction, if I enter 10,000, say forget about transaction, just I enter 10,000 here. I am entering this 10,000 here. If not 10,000, I am entering 100 or 1,000. If I ask you the question, what is this 1,000? There is no clue. It could be anything. Okay, it could be anything. It can be rupees, or it could be dollars, or it could be kilometers, or it could be some score or marks, or it could be anything. So until unless you give some specification, we cannot say what exactly this 1,000 value is. So that is the reason whatever the transaction we record, ideally we have to specify the currency. If the transaction is whatever we are recording the transaction, if the amount is related to rupees, yes, we have to address with a currency code as INR. Say this is not rupees, the 1,000 is not rupees, dollars, then you have to say USD. So this is for each and every transaction, whatever the amount we enter, that we have to address with the specific currency. Say for example 1,000 is INR, and again I am entering the 500, okay, as a USD, and again I am going to enter, say 5,000 I am entering, this I am saying some square feet. Okay, 5,000 entered, that I am addressing as square feet. So in the same way, whatever the amount you will be entering, whatever the value you will be entering as a part of transactions within the application, you have to specify the values belongs to which currency. If the values not belongs to which currency, exactly the value refers what? Okay, that you have to specify. I just given this as 5,000 square feet, and I'll enter 200. The 200 I'll say marks, and I'll say 50 is, okay, kilometers. Okay, kilometers, 50 kilometers. This is how, like, whatever the value you are entering, that you have to address the values refers which measure. So whatever the amounts whatever the value we are going to enter within the application, whether that is rupees or dollars or any other currency, or else if not amount, what exactly that is. That could be square feet, marks, kilometers, liters, okay, square feet, anything. It could be anything that we have to specify. Now if you take example of this information, say if you are doing the implementation for your client, where the client is doing the business in India. So in that case, the INR we have to enter. The most of the transactions, since client is doing the business in India, almost all the transactions we record in rupees. In that case, the rupees whatever you are entering, that you can call as local currency. So client is doing the business, okay, the company is doing the business in India. When client is doing the business in India, what are the transactions they record, ideally those all will be in the INR currency. So that currency is local currency. Wherever client is doing the business, in which country client is doing the business, that country currency we call as local currency. But here, say we are recording transaction in dollars, but the company is not doing the business in US, but still they have some transactions which are related to USD. So the USD is not their local currency. So we have a company where we are operating in India. Okay, so within India, whatever the transactions we record, we'll record in rupees, in INR currency. Even we are doing the business in India, sometimes we may have some sales activity or purchase activity with US. So you are purchasing something from US, so the transaction can be in dollars. So if that is a scenario, this currency, USD currency, we have to call as foreign currency. So we are doing the business in India. What is the local currency for India? Rupees. So India currency we call as local currency. Other than India, all the currencies we call as foreign currencies. As per this example, so say we are running the business in India, so India currency we call as local currency, and other than INR, all the currencies we call as foreign currencies. So now USD you can treat as a foreign currency. Okay, USD we have to treat as a foreign currency. So other than local currency and foreign currency, say for example, you are running the business in US. If you are running the business in US, in that case, USD will become local currency, all other country currencies will become foreign currencies. So this is the logic we have to understand. Where we are running the business, that country currency we call as local currency, and other country currencies we call as a foreign currencies. So this currency we can call as a local currency. In other words, instead of calling it as a local currency, you simply can call as functional currency. Both are same. Okay, functional currency, or you can call as local currency. Okay, in which country we are doing the business, that country currency we call as functional currency. All other currencies we treat as a foreign currencies. And apart from this functional currency and the foreign currency, these two are currencies only. These two, rupees and dollars, are currencies only, but depending on where we are doing the business, accordingly we can call it as whether that is a functional currency or foreign currency. Say for example, you have business in India and US. You have business in India and US. For India business, INR is the functional currency. For US business, USD is the functional currency. And for India business, USD is foreign. For US business, INR is the foreign. For every country, we have a functional currency. For other country, the currency would become foreign. That's it. Now, okay, these two anyway currencies. It could be functional or foreign, depending on where we are operating the business. You can address that is a functional or foreign currency. But here we have few other values as a square feet, marks, and kilometers, kilograms, okay, etc. Score. This is how we can address. So the square feet, marks, kilometers, these all are not related to currency measurements. So what are the measurements we have which are not related to currency? All those measurements we use in the system with the name called as stat currency. So you are going to record some transaction where you are going to specify the square feet information or marks information, some scores information, some production related information, or kilometers, kilograms, anything, any measurement other than currency related, other than currency, what are the measurements we have, any measurement related information if you are going to maintain within the system. For all those measurements, we can use the name as statistical measurements, right? Okay, or simply you can call as stat. The statistical, within that the prefix stat we use, and that we call as stat currency. Okay, these all are statistical measurements. These are not monetary measurements. These are not related to money measurements. So other than currency measurements, what are the other measurements we have? Those all you can call as statistical measurements, statistical calculations. So the statistical, from the statistical word, we take the first 4 letters as a prefix that we call as stat. So when you are going to enter the square feet or marks or kilometers or kilograms or anything within the application, simply those we call as stat currency. Reality, that is not currency, but still we use the term called as stat currency. This stat currency we use in only one concept within our applications. That too we use in the financial applications, not in our SCM applications. Okay, just for our understanding, I'm just taking this point. So this is how the currencies can be classified. Remember, when we are dealing with the currencies within our application, the currency can be functional currency. If not functional, that is a foreign currency. Okay, so if the currency is not functional or foreign, then that could be stat currency. These are the currency types. Okay, these are the currency types which you have to understand. We have basically three type of currencies. So functional currency, foreign currency, stat currency. So currency types. Okay, currency types. So functional currency, that is nothing but local currency. Wherever you are doing the implementation, or which country client is going to use this Oracle application, so that currency we call as a local currency, or say functional currency. So wherever client doesn't have their business, and if with that country, if client is going to record the sales or purchase transactions, what are the currency the client is going to use, that currency we call as foreign currency. Simple example, if you are doing the business in India, okay, that USD currency we call as foreign currency. Say when we are running the business in only USA, India currency will become foreign currency for us. So which is not currency, what are the different measurements, other measurements we have? For all the measurements, Oracle given one name called as stat currency as per our application. Reality, that is not currency, but to manage that relevant transaction within the application, this is the name we use. So these are the three type of currencies we have: functional, foreign, stat currencies. So when I talk about accounting calendar, we discussed we have to finalize the year type and we have to finalize the period type so that we can create the accounting calendar. Once you finalize the year type and the period type, you can create the periods. You can say the John, and when John starts. John starts with the 1st and it ends with the 31st of John. So this is how we can create accounting calendar. So here 12 periods, you may have one more additional period, 13 periods. Then within the accounting calendar, we'll create all the periods. We'll create the 13 periods. The period starts when and ends when. On which date the period starts? Of course, we know every period starts with the 1st of that month and ends accordingly, depending on the period. If it is Jan, it ends with 31st Feb, okay, 28, and again say April, 30 days. So this is how like we have to create the periods within the accounting calendar. So that means we have to create the accounting calendar, okay, based on the country, and within that country, what are the financial year we have. Accordingly, we have to decide on the year type. Then period types also we have to take the decision, and we have to create the accounting calendar. But when it comes to currencies, all currencies Oracle is providing within the instance. Already we discussed what is the meaning of instance, right? So within the instance, all the currencies Oracle is providing, all the currencies. So rupees, dollars, dinars, dinams, okay, all the currencies Oracle is providing within the instance. What we have to do is, what are the currencies we require to record the transaction? Just we have to go and activate them. It's nothing but enabling. We have to enable the currency. We have to activate the currency so that the currency can be used when we record the transactions. So since all the currencies Oracle is providing, simply we can say currency information is seeded information. Okay, seeded currencies. So all the currencies Oracle is providing, when you take the license to the product, within that product itself you could see all the currencies. We create accounting calendar, but we don't need to create the currencies. So all the currencies Oracle is providing, that is the reason we call as currencies data as seeded data. Okay, all the currencies Oracle is providing. So currencies information we call as seeded data. Seeded data means the data which is available along with the application which Oracle provides, that we call as seeded data. So currencies data is seeded data, we no need to create. But when it comes to accounting calendar, we have to create. Oracle is not providing any seeded calendars. Seeded calendars means which are predefined calendars. So calendar we have to create, but currency we don't need to create. All the currencies should be available. Which currencies we require? It could be foreign or functional currencies. What are the currencies we require? Simply we can go and do activate those currencies by enabling. Done. That's all about calendar and currency. And when you record the transaction, yes, we discussed date we have to capture. For that we have to get ready with our accounting calendar. And what are the amount you are entering, that you have to address with the currency. So we have a different type of currencies. So which currencies we require, accordingly we have to set in the system, so that whenever you record the transaction, you will be able to specify the amounts are belongs to rupees or dollars and what exactly. Fine. For date, calendar is required. For amount we have to specify the currency. Now other point is activity. What activity we are doing, that we have to capture very detailed level. So you are doing the sales activity, or you are doing some purchase activity, or you are spending some money for some different purpose. Whatever it may be, you have to capture the information more detailed level, so that that can be tracked very easily, and the same data can be used for reporting and many other purposes. So that is the reason the activity what we are going to capture, you have to take the information more descriptive manner. The detailed information you have to take. So as an organization, what we have to do is, if you are recording the transaction, so you have to specify the transaction is belongs to which company. And you may call as a company, or you may call as a branch. Okay. So you have to specify, say you have within your organization, within your enterprise, say you are doing 3 businesses or 4 businesses, or else you are doing only one business, or you got different branches. Now when you are recording the transaction, you have to specify the transaction is belongs to which company, if not company, which branch, and again within that company or branch, the transaction is belongs to which department. These minimum details we have to provide. Okay, or else sometimes what are the transaction you record, the transaction is belongs to which project. So you have one branch there, you are operating different projects, you are doing the different projects, whatever you are spending, that is belongs to which project you want to capture. So this is how, like, or else you are into different vertical of businesses, different type of businesses. Okay, so you will have a requirement of the transactions belongs to which vertical of business, which line of business you have to capture. For that reason, you have to predefine those details in the system, so that whenever you are recording the transaction, simply you can specify this transaction belongs to which company, which department, or which project, which line of business. All you can specify very detailed level and easiest way. So that is the reason what we have to do is, when you are recording any transaction, which information you have to capture, that you have to prepare. Say when we are recording the transaction, say we want to capture the company details. The transaction is belongs to which company you want to capture. Again, the transaction is belongs to which department that you want to capture. And based on the activity you want to capture the account. If you are purchasing the laptop purchase account you have to capture. If you are selling the laptop, okay, laptop sales account you have to capture. If you are paying the salaries account you have to capture. When you are paying the salaries, again you have to capture which department is doing this activity, again for which company the salaries we are processing. These and all you have to capture. Again, if you have a project scenario within your organizations, if you are dealing the projects, etc., that information also you have to capture. So this is how just you have to keep the information ready. Say for example, when you record the transaction, we want to capture the transactions belongs to which company, and again within that company the transactions belongs to which department, and again which activity we are doing. So this is what we have to capture. Say for example, say we have a different companies. So say we have consulting company. I'm taking the name as, I'll take the company name as XYZ. Company name is XYZ. XYZ Consulting, and say XYZ Automobiles, and XYZ say software development. So these are the three different entities we have, different companies we have. And to run these three companies' businesses, we may have a number of departments. So we have a finance department, we have sales department, we have purchasing department, so we have HR department, we have marketing department, so we have R&D department. This is how we can have a number of departments. So across all these departments, when we are running these three companies, we'll do a number of activities. All the activities you can maintain as accounts. So you may have sales account, and you may have different purchase accounts, or else you can write more detail level what exactly will be purchasing. For each purchase we'll have a separate account, but I'm just writing as a summary. Purchase accounts and multiple sales accounts, right? Multiple sales accounts you can have, and you'll have a many accounts, say salaries accounts. Sorry, I already written as sales, it says salaries accounts, purchase related accounts, sales related accounts, some other expense related accounts, a number of accounts. If you look at companies, you can see hundreds and thousands of accounts, every company based on the activities what they do. The sales or purchase or other internal activities or different activities. They'll have a number of accounts based on the transactions which they perform. So this is how we have to maintain how many companies we have, how many departments we have, what are the different activities we do. Accordingly, we have to maintain the accounts. We have to maintain the accounts. So if you maintain the information within the application, like companies, departments, accounts, when we are going to record the transaction, yes, with the help of calendar, we can capture the date, what are the amount we enter, that we can address with the currency, whether that is a functional or foreign, exactly which currency. Along with that, what are the activity you are doing, that for that activity you can write the detailed description. The transaction belongs to which company and which department, exactly which activity. These details you can capture as a part of transaction, so that each and every transaction would be more meaningful. So that is the reason these details we have to maintain within the application. So if you are going to capture, if you are going to maintain this information within our Oracle application, so we have to use one feature called as accounting key flex field. Okay, so I given the title as company. Under company we are maintaining the company values, company details. We given the title as department. Under department we are writing all the department values, department information. Under account title we just listed few accounts. Okay, again all these details are belongs to which company, which enterprise, that you may give the title. Say for example, these are all the companies, departments and accounts are belongs to, say, XYZ group. Say XYZ group. These are all the details are belongs to XYZ group. So XYZ group has these companies, these departments, and these accounts. So this is some sort of hierarchy. Under XYZ group, we have company, department, account. Under company, these are the companies. Under departments, these are the departments. These are the accounts. So in the same way, we have to maintain within the application. To maintain this sort of information within the application by following this kind of hierarchy, we have one feature called as accounting key flex field. Okay, we have one feature called as accounting key flex field. Okay, we have one feature called as accounting key flex field. This accounting key flex field will help us to maintain this kind of hierarchy, creating XYZ group. Under XYZ group, creating companies, departments, accounts. Under respective titles, creating the relevant information. This and all you can do with the help of accounting key flex field. If you are going to maintain all this information within the accounting key flex field, which is one of the feature within our applications, so what is the naming convention we have to use for all these? So here, whatever the titles we are giving as a company, department, and account, these ideally we call as a segments. We call as a segments. Why we are calling as segments? We are segregating this data into companies, departments, and accounts with the help of these titles only. This we call as a company segment. This is a department segment. This is the account segment. Under those segments, we have the relevant information. So that information we call as segment values. We call as segment values. So these titles, as per our Oracle application, within Oracle application, if you are going to create this sort of titles, these we call as segments. Here, as we discussed, we have three segments: company segment, department segment, account segment. Under company segment, we have company names. Those simply you can call as company segment values. Okay, simply these all are segment values. Again, these values are belongs to which segment, accordingly you can call. These three we call as company segment values. These values we call as department segment values. These accounts we call as account segment values. Simply you can say these are the segments, these are the segment values. And here whatever the name we are giving, this total information belongs to which enterprise or which group, the type name we are giving. This all information belongs to which organization that we are giving here. This we call as organization structure, or you can call as chart of account structure, or say chart of account structure name. Okay, chart of account structure name, or you can call as organization name. Okay, organization name. So within this, under this title only, we are creating all this. That means, so within the chart of account structure name, under this chart of account structure name, we have to create the segments and the segment values. So this all, whatever you create, okay, the chart of accounts, structure name, segments, and the segment values, these and all we can create by using the accounting key flex field. This is one of the feature which is available. By using the accounting key flex field, we can, within the accounting key flex field, we can create the chart of account structure name. Within the chart of account structure name, we can create the segments. For each segment, we can create the segment values. So in which application we have this accounting key flex field? This accounting key flex field is available within the general ledger application. Okay, general ledger application, simply call as GL. Within the general ledger application, we have accounting key flex field feature. By using the accounting key flex field feature, we can create the chart of account structure name. Within the chart of account structure name, we create segments. Under segments, you can create the segment values. These chart of account structure name, segments, these all we call as simply chart of account structure. Okay, so simply you can call as giving the organization name as a chart of account structure name, and giving the segments and creating the segment values under segments. This all we call as simply chart of accounts. or say chart of account structure. This we call as chart of accounts, COA. So how do you create the COA, chart of accounts? First we'll provide the chart of account structure name, then we'll create the required segments. Within the segments we create the segment values. Okay, segment values. This is how we can create the chart of accounts. Where we can create the chart of accounts? By using the accounting key flex field. By using the accounting key flex field, we can create all these all definitions only. Simply we are calling a chart of accounts. Simply you can say we can create the chart of accounts within the accounting key flex field. Where we have accounting key flex field? Within the general ledger application. Okay, so this is a simple point we have to understand. If you want to capture any description of the transaction, we have to create the chart of accounts within the application with the help of accounting key flex field. Accounting key flex field is available as a part of general ledger application. So already we discussed the general ledger application is related to financials. Yes, general ledger is related to finance, but when we are going to implement any application within the Oracle applications, it could be our purchasing, our inventory, or order management, or it can be any HRMS application or finance application. We have to create this chart of accounts along with the calendar. Currency we have to enable, chart of we have to create the accounting calendar. Along with that accounting calendar, as per the company requirement, what data they want to capture, based on that requirements, we have to create the chart of accounts within the accounting key flex field. The accounting key flex field is available within the general ledger application. Now the simple point is, within the general ledger application, we have to create the chart of accounts by using accounting key flex field. That is a mandatory, compulsory. Okay, without creating this, you cannot record any transaction in any application. So the simple point is, to capture the date, we have to create the accounting calendar. Okay, to address the amount what you are entering within the each and every transaction, we have to set the currencies ready. And to capture the descriptions for each and every transaction, we have to create the chart of accounts. Okay, we have to create the chart of accounts. So to capture the date, we have to create the accounting calendar. You can call it as accounting calendar, or simply you can call as calendar. And to specify the amount related information, we require currency. And what are the transactions we are recording? The transaction belongs to which company, which department, account. Still, if requires, where you want to relate the transaction, to track all those details within the application, we need chart of accounts. How we can create the chart of accounts already discussed. Within the general ledger application, we have accounting key flex field. Within the accounting key flex field, we have to create the chart of account structure name. Within that, what are the segments we required? You have to create. For each segment, you have to create the values, which you call as segment values. So this chart of account structure name, segment values, these definitions simply we call as chart of account, COA. So if you want to record any transaction, we need calendar, currency, chart of accounts. So along with these calendar, currency, chart of accounts, okay, we use one more component called as accounting method. Okay, accounting method. When we start working on the subledger applications, we'll discuss what is the purpose of it. As of now, simply try to understand this accounting method contains accounting rules. When we record the transactions in purchasing application, inventory application, or any other application other than GL, other than general ledger application, if you are going to record the transactions, it could be payables or purchasing or inventory or receivables, or it could be any other application. we discussed, other than GL, all general ledger application, all applications we call as sub-ledger applications. When we are going to record the transactions in the sub-ledger applications, so by following which rule system has to create the accounting entries, creating the debit and credit accounting entries. For that we use the accounting rule. Once we start working on the sub-ledger applications, we'll talk about more detail level. As of now, remember, so when you record the transactions in inventory, purchasing and other applications, we require accounting rules. All the accounting rules are available as a part of accounting method. The same accounting method you can call as sub-ledger accounting method also. Sub-ledger accounting method. Simply you can call as accounting method. Otherwise this you can call as sub-ledger accounting method. Both are same. Okay. Now if you want to record the transactions, we need these four components. If you want to record the transactions only in the GL, these three components are enough. Say within the general ledger application you want to record transactions. The calendar, currency, chart of accounts are enough. You can capture the date, you can specify the amounts with the currency, and you can capture the description of the transaction with the help of chart of accounts. By using these three components, you can record the transactions within the GL. But other than GL, if you want to record the transactions in any other application, along with these three components, we need accounting method also. Within the accounting method, you'll have a accounting rules. If you create any transactions in inventory or purchasing or payables or in any other application, so how system has to create the accounting entries, all the rules are part of this accounting method. So that is the reason finally we require these four components. If you have these four components ready within our application, you can create transactions in any application. You can create the transaction GL, AP, ER, purchasing, inventory, order management, or any application you can create the transaction so that system would be able to account them. It can create the accounting entries wherever it is applicable. So that's how you will be able to track each and every transaction more detail level, so that the same data you can use for reporting purpose. So within the application, we can group these four components. You can group calendar, currency, chart of accounts and accounting method. So before grouping, one more point here. See, the calendar is starting with C. And currency also starting with C. And chart of accounts also starting with C. Accounting method is starting with A. Instead of just considering the first letter, consider second letter. This is what Oracle says. The second letter is C. So these all are starting with the C. 1, 2, 3. 3 are starting with the C. The fourth one is starting with A. Ignore A and consider second C. So now total these are 4 C's. Okay, total these are 4 C's. So instead of saying by using the calendar, currency, chart of accounts and accounting method, we can record the transactions in Oracle applications. Instead of saying that, simply you can say by using the 4 C's, okay, by using the 4 C's, we can create transactions in Oracle applications. In any application, we can create the transactions in Oracle applications. That's it. Okay, already we discussed, if you have only these first 3 C's, okay, only first 3 C's, you can record the transactions only in the general ledger application. If you want to record the transactions in the sub-ledger applications, we need accounting rules. Accounting rules are part of accounting method. So if you can include accounting method along with these 3 C's, so you'll be able to create the transactions in sub-ledger applications also. By using these 4 C's, you can create the transactions in any application. So now we can group these 4 C's. Okay, we have option to group these 4 C's. By grouping these 4 C's, we can create primary ledger. By grouping the 4 C's, you can create the primary ledger. In short, you can call as PL. By grouping these four C's, we can create the primary ledger. If you have a primary ledger ready, we can create the transactions in any application. You can create the transactions GL, you can create the transactions in AP, AR, okay, order management, inventory, purchasing, take any application. We'll be able to create the transactions in any application. Of course, to create the transactions in other applications, we have to do that application related setups and a few other definitions also. Those will discuss very detailed level, but the simple point here to understand, to record any transaction, any application, we require primary ledger. If you want to create the primary ledger, we need calendar, currency, chart of accounts, and accounting method. So calendar we have to create. Currencies, all currencies Oracle is providing. Which currency we require, just we have to enable the currency so that we can use. And chart of accounts, yes, we have to create as per our requirement how many segments we require. We can decide based on what data we want to capture as a part of account description. Based on that we can have a segments. And accounting method, okay, accounting method Oracle is providing. So within that we can find the accounting rules, which transaction, how that should be accounted, everything you could find. Once you start working on the relevant transactions, we'll discuss more detail level that accounting method also. So if these four components are ready, you can create the primary ledger. If primary ledger is ready, you can record the any business transaction in any application. So this is what we have to understand. Okay. So to record the business transaction in any application, we require primary ledger. Okay, we require primary ledger. So this is what we have to understand. So when you create, before we go and create the chart of accounts, we have to understand few more points. We'll discuss more detail level. Then we'll start creating the calendar. We'll see how to enable the currency, and we'll create the chart of accounts. And any accounting method is seeded. Whatever Oracle provides, that we call as seeded. So we'll go on to create the primary ledger by including the calendar, currency, chart of accounts, and accounting method, so that we can start working on the transaction creation. And we'll discuss what else we have to understand before we proceed further. So any questions on these points from anyone, please? Any questions from anyone, please? Okay, we'll discuss more detail level. What are the points we discussed? Just it's all about introduction. You have to understand. To record the business transaction within any application, what we require? We require primary ledger. To create the primary ledger, which components are required? Calendar, currency, chart of accounts, and accounting method. When you talk about calendar, we should know which year type you have to use. The year type always will take based on the country financial year. And along with that, we have to decide on the period type. Once we are ready with year type and period type, simply we can create the accounting calendar. This you can call as accounting calendar, or simply you can call as calendar. When you create the calendar, the periods will decide based on the period type. If you are going to create the monthly period type, by default you can create 12 periods. Along with these 12 periods, you can create some additional periods also. Additional periods we call as adjusting periods. We use adjusting periods to pass adjustment entries. This is what we discussed related to accounting calendar. When you talk about currencies, currencies are classified into three types: functional currency, foreign currency, stat currency. The functional and foreign are real currencies, but based on which currency where we are using. If you are using the currency, specific currency in the country related, client related, and where client is operating the business, that currency we call as functional currency, or call it as local currency. Wherever client is not operating the business, but still if they have transactions with other country currencies, that currency we call as foreign currency. If you are doing the business in India, Only INR is a functional currency for us. Remaining all country currencies we treat as a foreign currency. You may have transactions, may not have transactions, but other country currencies we call as foreign currencies. And if you have any measurements which are related to statistical information, those statistical information, if you are going to enter in our application in the different scenarios, so that we have to treat as a statistical currency, simply that we call as stat currency. So that's how we have a three type of currencies. These all currencies Oracle is providing. Which currencies we require to record the business transactions? Simply we have to go and enable. Since Oracle is providing all the currencies, we no need to create. Simply we can call as currencies data is seeded data. Okay, seeded data means the predefined data which is given by Oracle. So along with this date tracking and amount related tracking, so what are the activity we are doing, that activity related description we have to capture more detail level. For that you can maintain how many companies we have, how many departments we have, what are the different activities we do. Based on that we can maintain the accounts. So for all this information belongs to which organization, that you can address as some group. This sort of definition within the application, whatever you do, that we call as chart of accounts. Okay, these titles we, as per our Oracle applications, we call as segments. These three titles we create as a three segments in our application. Not only these three, as per business requirement you can have more segments also. In each and every transaction, if you want to capture the project, if you want to capture some other details, if you want to capture say location also, accordingly you can maintain the segments. But here for our understanding, I take in the three segments. So these titles we can create as a segments in our Oracle applications. Under the titles, what are the relevant information we have, that we can call as segment values. This total information belongs to which enterprise or group company. That title you can call a chart of account structure name. This total information, whatever we are creating as a chart of account structure name, segments, segment values, these definitions simply we call a chart of accounts, COA, chart of accounts. This chart of accounts, as per our application, as per our Oracle application, we can create by using accounting key flex field. The accounting key flex field only will allow us to create all these in the hierarchical manner as a structure, under structure, segments, under segment, segment values. This and all we can create. So this accounting key flex field we have in the general ledger application. By using the general ledger application, okay, we have to create the chart of accounts with the help of accounting key flex field. So this is what we discussed. Once we are ready with this, our calendar, currency, chart of accounts, we can create the transactions in GL. But reality, we have to create the transactions in all the applications. In GL we create very less transactions, but the real transactions we create in the respective applications. Purchasing department, what are the activities they do, we have to record within the purchasing application, not in the GL. What are the activities payables department does, those we have to record in the payables application, not in the general ledger application, right? So that is the reason almost all the transactions we record in the subledger applications. If you want to record the transactions in the subledger applications, along with these three C's, we need one more component called as accounting method. The accounting method contains accounting rules. When you create the transactions in any application, which accounting entry system has to generate, the rules you can find. That is the reason we have to include accounting method. So now these are the four components: calendar, currency, chart of accounts, accounting method. These four components required to record any transactions. So these three components are starting with the C, and this accounting method is starting with A, but you have to consider second C. That's how you can call as these four C's. So accounting method, the technical term we have as a conversions also, but based on the conversions they are not taking C. If you refer Oracle documentation also, you could see from accounting method only they are taking the fourth C. That's how we can say four C's. By using these four C's, we can create the business transaction in any application. So instead of keeping these forces separately, what we can do is we can group those four so that it would be easy for us to record the transactions by using the primary ledger. That is the reason by grouping these forces we can create primary ledger. So you can call as PL. You can create the primary ledger. Since we are grouping these four into primary ledger, with the help of primary ledger we can create the business transactions. Okay, we can create the business transaction. This is what we have to understand. The simple point is to record the business transactions in any application we require primary ledger. How to create the primary ledger, what components we have to take into primary ledger, just we discussed for our understanding, but we'll see in the system how to do the same, how to create calendar, how to enable the currency, how to create the chart of accounts. We'll discuss more detail level. There are many points to understand when you create the chart of accounts, and the accounting method, how it looks like, that also I will go through more detail level. So this is what we have to understand related to primary ledger. So in the next session, we'll discuss more detail level about chart of accounts. Once we are ready with the chart of accounts, the relevant information, we'll go through few more points. Okay. Or else what we can do is we'll discuss some primary ledger related points. Once you are comfortable with that, before we go to create this chart of accounts and all, we'll discuss the relevant information more detail level. Okay, that's all for today. If you have any questions, please. Okay, no questions. Fine. Thank you.